Ever wondered, what if an unexpected expense were to arise? Well, that's where the magic of financial security comes into play. Imagine it as a safety net, there to catch you when life throws you a curveball. Let's talk about one of the cornerstones of financial security, the emergency fund. An emergency fund is a stash of money set aside to cover the financial surprises life throws your way. These unexpected events can be stressful and costly. Here's where an emergency fund can come to your rescue. It provides you with the financial buffer you need to stay afloat without sinking into debt. From sudden job loss, a major health issue, to an urgent car repair, having an emergency fund can mean the difference between a temporary hardship and a financial disaster. It's your personal financial safety net, providing peace of mind and stability during life's more turbulent times. So, an emergency fund is crucial for financial security. But how does one go about building it? Building an emergency fund may sound like a daunting task, but it's simpler than you might think. Let's break it down into a step-by-step guide that makes it achievable and less intimidating. The first step is to determine the amount you'll need for your emergency fund. A good rule of thumb is to aim for 3 to 6 months' worth of living expenses. This sum should cover rent or mortgage payments, groceries, utilities, transport, and any other essential outgoings. Remember, this fund is there to keep you afloat during unexpected events, such as a job loss or a major home repair. Once you've figured out your target amount, the next step is to set a monthly savings goal. It could be as little as £10 or £20 or even a percentage of your income. The key is consistency. It's better to save a small amount regularly than to set an unrealistic goal that you can't sustain. The third step is to open a separate savings account for your emergency fund. This creates a psychological barrier between your everyday spending money and your emergency savings. Look for an account that offers a good interest rate and easy access in case of emergencies. Now, you may be wondering how to ensure you stick to your goal. That's where the fourth step comes in: automation. Set up a direct debit to transfer your chosen amount into your emergency fund each month. This way, you're saving without even thinking about it. Finally, it's crucial to review and adjust your fund periodically. Your living expenses may change, or you might encounter an emergency and need to use some of the fund. When this happens, adjust your savings goal accordingly to replenish the fund. By following these steps, you can create a robust emergency fund that will provide you with a solid financial safety net. Remember, the journey to financial security is a marathon, not a sprint. It's about taking small, consistent steps towards a bigger goal. And the peace of mind that comes with having an emergency fund, that's priceless. Now that you understand the process, let's summarize the essential points about emergency funds. Firstly, the importance of an emergency fund cannot be overstated. It's an essential safety net that can make all the difference when unexpected expenses arise. Whether it's a medical emergency, an unexpected car repair, or a sudden job loss, having an emergency fund allows you to handle these unforeseen circumstances without falling into debt or sacrificing your long-term financial goals. Secondly, the process of building an emergency fund is not as daunting as it might seem. It starts with setting a goal, typically 3 to 6 months' worth of living expenses. You then systematically save towards this goal. The key is to make saving a habit, whether it's a set amount every month or a percentage of your income. To make this process easier, consider setting up automatic transfers to your emergency fund. That way, the money is moved before you have a chance to spend it. And don't forget, every little bit helps. Even if you can only save a small amount each month, it will add up over time. Thirdly, it's crucial to remember that your emergency fund is for emergencies only. It's not a vacation fund, and it's not for discretionary spending. It must be reserved for unexpected, necessary expenses. This discipline is what makes an emergency fund truly effective. Finally, it's important to review and adjust your emergency fund regularly. As your living expenses change, so should your emergency fund. And if you've had to use some of your fund, make sure to replenish it as soon as possible. In conclusion, an emergency fund is an essential part of your financial security. It's a buffer against unexpected expenses and a safeguard for your financial future. It requires discipline, regular saving, and occasional adjustment. But the peace of mind it provides is well worth the effort. Remember, a well-stocked emergency fund is your best defense against financial instability. Start building yours today.